Uber, Bitcoin, self-driving cars. Combine those three together, and you have the self-owning taxi. A car that is a corporation that owns itself, pays for the car lease, the car insurance, and the gasoline from the revenues it makes, giving passengers a ride, and there's not a single human involved in that matter.
Someone, Mike, said, I'll take a one-year, T-bill. I'll collect that on the other side. I'll get into the market. You don't think the market's going to be substantially lower at some point in the next 6 to 12? Like, there will be a better entry point, when you're redeeming maybe that coupon than there is right now? You don't think it goes down?
Listen, if you're a wonderful market timer, you might be able to pick, there could be a dip and you might be able to buy the dip. It feels to me we're really range bound and low volatility. That means you could pierce either side of the range and have a quick move. I don't see any urgent sellers or nervous longs. I see people that are kind of bored and stacking. Right? There are some. The government is going to sell some Bitcoin later in the year. So there are some sellers, but it's not like we have a leveraged market right now where people are sitting on pins and needles. Leverage is at a low. Volumes are at a low.
If you have $10,000, if you got 10 grand and you put in your mattress, in a year you have 10 grand. If you put in a T-bill, you have 10,500. That's like kissing your sister.
What if it's 100,000? What if it's a million?
What if Bitcoin's at 40,000 by the end?
You really think Bitcoin is taking off this year?
I think it gets higher highs and higher lows, don't you think?
30,000 is a gift.
Volatility adjusted is still
65,000.
So gold also had.
If you bought a pizza back in Mike, how much did that guy that bought the pizza? He bought the pizza in what year was that? And it's $220 million now.
It's an expensive pizza, no doubt about it.
You got to get with the the young lady.
I am very nervous, Listen, because you guys are far wiser than me. I'm
mansplaining. I don't want to mansplain.
I can't go up against Mike Novogratz, Joe Curtis.
Yeah, you can.
And think I have anything.
We could both be total wackos, and there's wackos everywhere. You got to know your. You got to know your risk to go into crypto, Mike. I mean, I kid around a lot, but if you can't afford to lose it, I don't know if I would do it.
On a risk-adjusted basis, Bitcoin and Ethereum are the two best assets to invest in over 2 years, 3 years, 6 months. Again, it used to be an 80 vol asset. Now it's a 40 vol asset. And so you shouldn't buy as much Bitcoin as you do JP Morgan stock. But volatility adjusted, it's been a much better bet than JP Morgan.
Last time you were on, Mike, someone took offense that you kind of conceded that a lot of the buying was by people that already own it or people that are already involved, and there's no new adoption, and that's a problem. Is that still?
No, what we're seeing is the new buyers are all small, and they're aggregated on these platforms. If it's Revolut or Robinhood or Square, the Cash App from Square, and they continue to buy small amounts and hold them. And so, in some ways that makes a pretty healthy market because these are long-term hodlers, as they would say.
Yeah.
We're not seeing the institutions come in. That got stopped by a combination of Sam and Gary. Sam Bankman-Fried and Gary Gensler. And so you're seeing lots of interest still, just not a lot of activity.
So, will you help Kelly with her?
No.
You don't want myself. No. Well, we've been talking, and it's totally about what your risk profile and tolerance is, whether you buy a 1-year T-bill or
Mike,
or Bitcoin at 27. You don't like no.
You have to tell me you would take a 1-year T-bill at 5.2% all day long. No?
Listen, you have to have some 1-year T-bills, but I've always kind of lived on the risk curve. And listen, we're in a bubble right now, an AI bubble, and so having watched bubbles my whole life, it's a pretty exciting one, and it's just starting. And so it makes actually trading the stock market complicated because, everyone's known that stat, right? 494 stocks of the S&P are unchanged, and the other 6 make up all the gains. It feels early, right? The AI story is just starting in lots of ways. We started using ChatGPT, 2-3 months ago. Bubbles don't last 3 months. They last a lot longer. Bubbles always happen around things that fundamentally change the way we live, Right? Bubbles happen around real things. The story is so powerful, people buy way in advance and get caught up in the frenzy. And so, listen, NASDAQ's way outperformed. It could continue to outperform. It's a dangerous trade.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we have Mike Novogratz on CNBC. Will there be a better entry point in the market? And guys, we know it will. We know it for a fact. We know what Janet Yellen and Jerome Powell have to do. They have to land us in the fourth industrial revolution. Whether it's a soft landing or a hard landing, they have to get us there. Destroying this current global legacy market so the digital transformation can happen. And we know the mainstream media is not going to tell you this. They're going to keep playing the Hegelian dialectic. And Mike Novogratz says the new buyers are small buyers. And the institutional investors are not coming in. Guys, the reason why they're not coming in because they're already in. They've been building from the beginning. We know the big banks and big corporations have been funding crypto from the start. Only thing you have to do is go back to the funding rounds. And you know the Crypto Teacher brings you the numbers and the names. And Mike Novogratz speaks about the AI bubble. And we see NASDAQ breaking free from Bitcoin and crypto. But this AI bubble is not a normal bubble. Majority of the money is going to the big corporations. A bubble normally allows everybody to get in. Small, medium, and large projects. And then it dwindles on down. With AI is going straight to the big corporations. And guys, that's how we know it's all part of the plan. And remember, the Crypto Teacher told you. Because we have Microsoft, Meta, Nvidia, Google, to name a few that are all benefiting from it. And then, guys, you can't make this up. You have Jay Clayton and Cohen back on CNBC. And remember, guys, they end the FDIC video that I put. They've already been busted planning out this banking crisis, so then therefore they can bring in DeFi. And these small banks crumble, and we know when the small banks crumble, small businesses crumble, and the only ones that are going to be left are the big banks. And they talk about the debt ceiling. And guys, again, the debt ceiling was all part of the Hegelian dialectic. We know it allowed Janet Yellen to tap those government retirement funds to keep pumping the market. And this also is what's helping this AI bubble. But we know a bird needs both wings to fly. When it comes to the NWO's agenda, they always come together in order to move it forward. And then we had Jay Clayton and Cohen had a nerve to say we don't have enough housing and it's not affordable. And guys, all the chaos that we see going on, who calls it? That's right, the Fed. But you are never heard on social media. Remember, they control the supply and demand of your currency. And all you have to do is go to real estate numbers, rent payments. It was always the Fed moving them up. And remember, the Crypto Teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Well, that's an issue too. So, are you optimistic about the American dream?
Well, look, I'm optimistic that we actually had this debate.
Yep.
Like Gary said, for the last 3 months, we've been talking about what's going to happen here, and we've actually had a real conversation around these issues. And the American people stepped up. That's
so
why
McCarthy is stronger or weaker after all this?
I think he's stronger.
And you don't see a challenge?
So here, I agree with Jay. So we've had this debate. The American public is coming out the winner. We're coming out the winner.
A little bit, incremental.
No, we're coming out the winner. We're not having a default.
Yeah.
We're going to see the normal. We're going to see the normal distribution of political views tonight. I think you're going to see the two extremes vote against the bill. You're going to see the fat middle vote for the bill. You're going to see it come from both sides. You're going to see Democrats and Republicans both support the bill in the middle.
Yeah.
And you'll see this total normal distribution of political views in this country. Right. I think everyone's going to realize, hey, we can probably get things done.
And those people
are the ends of the bell curve getting wider?
They're getting a little fatter. They're definitely noisier. It's a lot noisier at the ends than it is in the middle. We know that. It probably is getting a little fatter. But what you're going to see is they're going to be well over 218 votes in the middle.
Yeah, and what you really like is that those people in the middle all agree that we're spending too much money.
Mm-hmm. Which is that's
a good thing.
That is pretty good.
Bill.
If you listen to Hakeem Jeffries, or actually the president himself, he was really definitive that he wouldn't negotiate anything but a clean debt ceiling. What do you think happened behind the scenes? Did the reality that some of he'd be the first president that ever had the default, the debt factor in it? Because he became the old Joe Biden, didn't he? The deal maker Biden?
Well, I think it's pretty simple. You know, until the Republicans could come up with their own proposal that they could get through the House, there was no reason for the White House to negotiate.
Yeah.
And the White House was taking the posture, as I would have advised them to, or anyone at this table would have advised them to. Look, you have to pass a debt ceiling increase because all you're doing is passing legislation to pay for things that you have agreed to spend in the past. So if you can't legislate for that, it's not my problem as the White House. It's your problem as Congress.
Right.
Once McCarthy got together with his caucus and they passed a bill that would raise the debt ceiling, all of a sudden the tables turned. The Republicans had a solution to the problem. The Democrats did not like the solution. It sort of forced them to come to the realization that, okay, the Republicans have put a solution on the table. The ball went from their court to our court. Now we're forced to respond.
And the solution had a bunch of things that we all recognize as true, which is we've got a spending problem. We have a labor problem. That's one of the things that's driving inflation. And McCarthy was very smart to put those things front and center, and I think the American people, particularly the people in the middle, said, you know what? These are reasonable asks.
You mean the work requirements as well?
Yes, absolutely.
Right. What I'd say to the part of the Democratic Party that doesn't want to do this is, look, it's not going to kill you for COVID funds to do that. That's not a bad thing. It's not going to kill you. Some of these things are you shouldn't just dismiss them out of hand. To the Republicans that say it's not enough, I would say win some elections. You didn't have the presidency or the House or this, and all this has already been passed while you were there, twiddling your whatever you're doing. So at this point, let's move forward.
And on that, moving forward, the second order effect of this is, what are the things that are going to drive growth in America? Because whether you look at it from the right or you look at it from the left,
government spending,
we need growth and
a bigger government.
Actually, to your point, if you told the two of us you were going to spend $9 trillion, let's pick any number, in early 2020, we'd say that you'd have 5 or 6% growth. Now you'd have an inflation problem, but you'd have crazy growth. One of the questions we ought to be asking ourselves is, with all that fiscal stimulus, how come growth is pretty anemic?
What's your guess?
What's my guess?
Yeah.
Look, we have the same problems that we had in 2019, 2020. And it's pretty simple. Energy independence, we can deal with that. Immigration and labor, they go together. And housing. We subsidize the heck out of housing at the federal level, but we restrict the heck out of it at the local level. We have, 5 million? I mean, you guys did a lot of work on this. We have 5 million too few homes?
Yeah. At least 5 million too few homes. Exactly. We're encouraging people to create homes. We're one of the very few countries in the world that would even think about allowing financial institutions to create a 30-year fixed mortgage, which is a dangerous, dangerous instrument. But we still don't have enough homes, even with allowing the financial engineering to make homes more affordable.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box, provided to you by the People's Bank of China.
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The Stock Channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.